So we saw an initial rally first thing in the day, it disappeared. What happened?
Well, we saw the markets take some support from the bond markets first thing, and the lack of contagion in Asian markets overnight lent some support to the futures. We rallied aggressively in the first hour, but after that the market really just couldn't follow through.
What changed people's sentiment? Why the initial enthusiasm and then the change in the market sentiment?
Once again we saw gold rally, we saw the Swiss franc rally. There's a real concern here around risk, and people are de-risking across the equity markets, particularly focusing on growth. We saw cyclicals underperform aggressively today. The defensive names were what performed. So the market, here is focusing on global growth.
So it's less concern about the S&P downgrade in the United States than overall concerns about growth in the developing world, in the Eurozone, and also in the United States?
I think the United States downgrade will take some time for the markets to digest. It's not something that we've seen before. The knee-jerk reaction from bond markets wasn't that aggressive. Equity markets maybe have been a little bit complacent around what that means, but I think ultimately we need more time to take that in. This is around sovereign, this is around growth, and obviously with the S&P downgrade to add on top.
So in the short term, what are you looking at? Are you looking forward to those GDP figures coming out of France, Germany, Spain over the next few days?
I think the market's just looking for some more clarity. Every time we seem to get some support from the ECB, we get some comments from other European leaders, and the markets don't like what they're hearing, so they'll sell off aggressively, and we continue just to see de-risking. We are concerned about the economic figures. Friday's data was good, and we saw a rally on Friday, but ultimately that faded after the S&P downgrade on Friday night.
Now, we did see bond yields falling, particularly for Spain and Italy. Do you see that sustaining itself long term, or is this just a temporary boost from the ECB intervention today?
Ultimately, we saw the support for the bond markets as a preemption of the ECB coming in at 9 a.m. this morning. They have held the level well. We're going to have to wait and see what happens when they push out towards 6% again, whether we can see that support coming immediately. But we were surprised today. We thought that the bond markets might lend some support to the equity market. That clearly hasn't happened. Once again, we're de-risking, and it's aggressive selling across the board in equities. So the focus really here is around whether we can find some support. Ultimately, technicals have all been broken through again today.
Great.